Now, the Bank of England has raised interest rates to the highest level in nearly 15 years.
Yes, it was pressured into the move after what turned out to be a shock rise in inflation. It bounced up a little bit, as we reported in the week, to 10.4%. Of course, that's bad news for people already struggling to pay their mortgage. Let's talk to business and finance commentator Michael Wilson. Good to see you this morning, Michael. I mean, obviously, it's bad news for people who are already struggling in the cost of living crisis. However, we've got to remind ourselves, haven't we, that these are still very ordinary rates of that we're looking at now, compared, even though we've got used to these ridiculously low rates for a long period of time.
Depends where you're coming from, doesn't it? That's the thing. I mean, they have been ridiculously low. 0.1 they were not that long ago, and then suddenly now 4.75%, 4.25% rather, which is, you know, that's a big increase. It doesn't really matter that 4.25 doesn't sound a lot. It still is in comparison. There you are. You see, there's your graph. Absolutely. There's that flat line of when they were 0.1%, and then this is the 11th back-to-back rise since 2021, you see. So that I mean, this is really hitting people. And actually, the chairperson, I'll call her that, of the Treasury Committee yesterday said that Harriet Baldwin, this is, and she was saying that banks are very, 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 very quick to in fact, they raise the interest that you pay on your loan and on your mortgage immediately as soon as that news comes out of the Bank of England. That rise in interest rates ought to be helping savers. And of course, I mean, if you're still saving and you're happy with those kind of rates, but it takes a long, long time, much longer, for savers to actually benefit. However, the bank couldn't really do much else but raise interest rates. You quite rightly referred to that 10.4 increase as far as inflation is concerned. But I would drill down and ask you presumably to drill down as well with me, if you would, to where core inflation is. That's the most important thing. And that was just over 6%, and that's just about in line. So basically, what you saw in February, this 10.4 in inflation, is about things like clothing and footwear, which are notably volatile as far as prices are concerned. Now, do you want any good news from what the bank was saying yesterday? There's only some marginal bits. You're quite right to focus on the cost of living. Doesn't matter what inflation is. The cost of living is high. The cost of living is high. However, inflation probably will come down as this year goes on. And it could be that interest rates might be falling to 3% by 2024. Now, that was the decent news that I took out of what was all being said yesterday. Yeah, it was very much expected that they would raise rates, just as central banks around the world are being forced to do to contain inflation. But there is a glimmer of light. Let's focus on that.
Yes, and that certainly was the message, wasn't it, from Andrew Bailey yesterday, saying he's feeling more hopeful for the economy, and he doesn't think the UK is going to be heading into recession now.
No, I mean, no recession, slight growth. Again, I you know, who cares about the word recession and what the technical iteration of that actually is? I mean, if people are feeling hard up, they're feeling hard up. But interestingly, out this morning, consumer confidence figures that show actually a slight rise in consumer confidence. Yeah, people are worried about their own money, but as far as spending it is concerned, they're slightly more optimistic about the way the UK is heading. So yeah, avoiding a recession, if you want to term it as that, are people finding the going tough? Yeah, of course, will that continue for the next couple of years? Yes, I'm afraid it will. There's nothing we can do about it, unfortunately. But don't listen to anybody that says to you this is all about things outside our control and happening in the rest of the world. What these inflation figures were showing on Wednesday and what the bank was reacting to is precisely everything that's wrong with the UK at the moment, and the fact that it's having to weather this cost of living storm.
Yeah, will this increase, though, actually make a difference in terms of bringing that level of inflation under control?
It's the only weapon that central banks have. It's called monetarism, and I mean, it just, it's taken, apart from places like I think Albania's one, Turkey's certainly another, and it could be Venezuela as well. But apart from those kind of places, what central banks do is they see inflation rising, therefore they raise interest rates to try to contain it. What they're trying to do is crimp people's ability and wish to spend money and to borrow money, and they feel that that's the only weapon that they have, really. And if they feel they do, that's called monetarism, as I said to you. And that's all they have. Fiscal stuff is about tax, and that's what the budget does. But monetarism is what the central banks do around the world, and they're all facing exactly the same problem. You have to trust politicians and central bank governors who say what we need to do is clamp down on inflation first of all, and then we'll worry about the rest of the economy.
Michael, like you say, hopefully that's the last interest rate hike that we see. That they start to come down in a different direction now.
Yeah.
But in the meantime, people are going to be facing mortgage rates of 8%. Do you think there will be pressure on banks to offer more support for those people?
Well, I mean, the only thing that pressurizes banks is you, I think, and if you want to get over the public, if you want to get over the normal inertia that there is about banks, and you start to shop around, that will force banks to rethink this, because the banks don't want bad customers any more than the mortgage companies do. But there is now, this morning, a sort of 50-50 chance that this will be the last interest rate rise of this particular cycle. That's what the money markets are saying right now. Now, I'm not saying the money markets are always right, but that is the general feeling, that the Bank of England is sort of reaching the end of its interest rate rising cycle. A 50-50 bet at the moment. That may increase, but as I said, there is a general feeling that rates should be down to around about 3% possibly by the middle of next year. But again, I wouldn't bet the ranch against it, but that's the way people are thinking at the moment.
OK, Michael, good to see you this morning. Thanks very much indeed.